Hi everyone, I'm James, this is Antonio, and this is Michelle, and we're going to present on Germany. We're going to present the figures that you're all used to by now, the GDP, the inflation, unemployment and exchange rate. I'm going to give the key industries of Germany, and then Antonio's going to sum up with some trade ideas with regards to Germany in the short and medium term. So everyone knows the key industries of Germany. It's got an enormous service sector with a massive finance source in Frankfurt and places like that. It's also got a huge automobile industry, and that comes under the industry part of GDP, giving about 30% of the overall GDP. And the rest is made up by agriculture. The GDP, the economic situation, of Germany has been very strong. A theme of our presentation is going to be Germany's strength versus the kind of leash that's on it from the EU. But as you can see from this kind of narrow view through the DAX, German economy is doing very well over the last couple of years. GDP reflects this in the pickup from the crisis, although it has been relatively stable over the last 2 years. And inflation isn't really up to the mark of where it wants to be at 2% under the Eurozone, but is much higher than the Eurozone, as you can see from this slide, where the gap is quite a bit lower than 0.8 of the most recent inflation CPI stuff in Germany. I'm going to hand over to Michelle now for the unemployment and exchange rate.
Looking at the unemployment rate, it has been falling since 2010, and it currently stands at 4.9, which is less than half of the average EU 28 countries' unemployment rate, meaning that Germany is really booming. If we look at the exchange rate, although Germany doesn't really have an independent currency because it's in the Eurozone, if we look at the euro, it fluctuates between 1.2 and 1.4 with respect to US dollars. However, overall, there seems to be a falling trend. From Germany's perspective, it wants a stronger euro because it currently has some inflationary pressure and overheating pressure if we look at the unemployment and inflation stats. But as it's in the Eurozone, it cannot do much. And especially recently, ECB has lowered its benchmark rate, meaning that we expect at least in the short to medium term, the euro is going to weaken. If we look at the forecast of a few important indicators, Germany is looking to grow very well if we look at GDP growth rate and unemployment rate. But we need to be careful of its domestic inflation, considering it's expected to be close to 4 and long term, which is much higher than the 2% CPI target. And now I'll pass on to Anthony about investment opportunities.
The general investment environment in Germany is very low risk. So we have a framework that pretty much decreases competition effectively and protects investors very much. This comes, of course, at an expense of lower returns. There are high taxes that we need to pay, and in some cases, employees are regarded more as the owners of companies. So this goes to Japan, in such a sense, like the model. In terms of concrete investment opportunities, we've come up with some short-term opportunities that we see ahead of us, and in the rate space, of course, we have this, potential quantitative easing that could bring long-term yields further lower. So, you might want to buy German bonds, as usual. Now, in terms of the currency, we could, short it cautiously because there has been a recent build-up in short interest on the euro. So, any sign of wavering from the central bank might bring about correction. In terms of the equities credit space, a good idea could be buying manufacturing, automotive companies that pretty much would benefit, on the one hand, from the depreciation of the euro, on the other hand, from the recent fall in metal prices, in particular iron. Long term, in the equity space, it's more or less the same. One might want to also benefit, try and reap returns from highly innovative, high technological companies. In terms of the effects, the depreciation of the euro looks more like, you know, more of a sure event. It needs to happen. Like, probably the euro is priced just right for Germany, but for the periphery it is not enough. They need like an inflationary stimulus. And in the rate space, we have a more neutral view. We don't really know what is going to happen. Definitely, Germany is going to have to follow the Fed at some point in raising rates. So that's about it for our presentation for Germany, and we welcome any kind of question for